We have with us Mr. Parag Rao to talk about a new card which has been launched in partnership of Marriott Bonvoy. First of all, congratulations for the card. Now I want to understand that how will this launch impact and create business for you?
Thank you. Thank you very much. It's a historic day today. We are launching India's first premium or affluent hospitality credit card today. The reason why we're launching it are twofold. And I'll talk about the environmental reason and I'll also talk about the choice of our partner. Post-pandemic, we're seeing a huge surge in travel and travel-related spends by Indians. Primarily leisure at this point in time. We're seeing a significant surge in expenditure happening by Indians domestically, and of course traveling internationally for their leisure spends. So that's a significant opportunity. And from what I hear from the industry sources in the hospitality and the travel trade, well, I think this demand is just going through the roof, and that's a significant new trend, etc. The second reason or the trend which we've seen in hospitality and travel is that there's much more discerning spends. What do I mean by that? Because Indians are now demanding and expecting wonderful experiences during the time that they incur their leisure travels. They want memorable experiences. When they travel with their family, they want to remember these things. They need pampering. They need a lot of different type of experiences beyond just going out, staying and eating. Okay, and so qualitatively the kind of spend which we're seeing is going up. So that's one core reason why we said this is the most appropriate time to have a focused product targeting this kind of expenditure in Indians. As you're aware, HDFC Bank always does significant amount of research before launching products which are focused on the needs of the customer at that point of time, and we also choose to see that it's a meaningful kind of expenditure for us to launch the product. So this is the environmental reason. The second reason is, I said, in our choice of the partner, Marriott is the single largest group of hotels, which is the largest hospitality player both globally and pleasant to be surprised even in India. They have a significant large number of hotel properties and significant number of brands, all focused and micro-segmented to target each and every set of customers. Okay, we do believe that the value which they bring in addresses this need of Indians to spend not only domestically but also internationally, because as you're aware, the Marriott chain is an international chain, and the Marriott Bonvoy program, I think, is a very inclusive program which covers all the 45 plus brands of the Marriott group, bringing in significant amount of value to this card. So that's the reason why we chose Marriott also. And here today we are speaking on this historic occasion of launching this product, and we're looking forward to our customers seeing significant amount of value in this product.
Right. Even before this launch, as far as the last quarter numbers are concerned, we have seen an addition of around 30% plus growth in the retail card segment. Now, after this addition, is there a target in mind? Is there a number in mind? And definitely it is going to be better than the last one?
We've always, HDFC Bank card portfolio has always grown at a rate higher than the industry. Okay, we intend to continue on this trend of growing higher than the industry. It would be difficult for me to predict any such number, but yes, we'll always grow higher than the industry.
Now coming to the underwriting part, which is something again that you have mentioned that HDFC Bank has performed better than the peers. Now what is the secret sauce of that? Is there different kind of underwriting strategy which you are focusing on? And also if you talk about, I mean, how different it is from others in terms of numbers?
Okay. We've always, right from day one of our portfolio, we've always focused on a very strong, robust underwriting process for all our customers. There are a couple of legs or parts to this entire structure. One is that we've always maintained approximately 75 to 80% of our sourcing from internal bank customers. These customers are people who have prior liability relationships with the bank. The reason why this particular strategy has been a success is that because we have access to information and data on transactions and trends, we're able to build far more robust scorecards, propensity scorecards, to be able to predict good and bad credit behavior, and hence accordingly we sort of pick and choose. The second leg or the second pillar of our underwriting strategy is that we ensure that we do very robust and very high frequency monitoring of the portfolio. The idea is to look at early warning trends in the portfolio, look at mitigants, or look at means in which indicate either good behavior or bad behavior, and we constantly tweak the portfolio to be able to compensate for such kind of this thing. The third, I think, leg of our strategy is that because we have a full suite of retail asset and commercial asset products, we constantly monitor the environment, see the interlinkages between economic downtrends, economic factors, and also spending behavior and personal finance. And hence we are able to get a complete 360-degree view of how money movement trends happen, where we see stresses across the portfolio, so on and so forth. And we're able to bring those linkages and interlinkages out to various other parts of the portfolio. So we get a rub-off effect of having a full suite portfolio. These are the three core legs of our portfolio. It's ensured that we have a very consistent and very robust underwriting strategy over the years. And I think that's the core reason why we've always performed better than the market in terms of our credit delinquencies.
Right. One last question I would want to ask about overall digital strategy, and over the last 2 years specifically HDFC Bank has focused on the same. Now as far as the migration of website is concerned and various other launches which HDFC Bank was planning, how much of it is done and how much is left?
Okay, so we embarked on a digital transformation strategy more than about 2.5 years ago. The idea was threefold. One was to modernize and sort of API-fy, if you may call so, existing large infrastructure. Mind you, that is like flying an aeroplane at 35,000 fleet and wanting to change the engine. The reason being that since we're a very large bank, most of our systems have been built up, our prior systems have been built up to last and to take on a significant amount of scale and volume. It would be extremely impractical and imprudent to sort of shut them down and just replace them with new. Right. It also takes time. So we've embarked on one part of our transformation strategy to sort of modernize, or what we call hollowing the core in many of our core systems. Okay, that is still a WIP, but we've gone through a significant part of our journey and we've derived a lot of efficiency benefits at the back end from modernizing the core. The second part of the strategy was, of course, to build completely new digital platforms. In that we've actually already had 3 or 4 key launches, some of which you know. So for example, we've launched a completely digital end-to-end 360-degree API-based sprinkler customer servicing platform. Today a bulk of customer queries and complaints, etc., are handled digitally. This platform is completely digital native, uses AI bots to handle and respond to a large number of queries, allows the customer to enter a platform, one digital platform, and exit it halfway and then continue on a second platform, and it picks up the threads, so on and so forth. And we've seen significant traction and customers are just loving that platform. That's one example of a product we've already launched. Another example is our Auto First platform. We've already started getting close to 25 to 30% of our new auto car registrations completely digitally. That's a zero touch, zero human touch type of product where a customer can get onto the platform, instantly apply for a car loan and get it dispersed to also all in minutes, completely done digitally. 25 to 30% of our new incremental sourcing today is already happening on the Auto First platform, and I think it's the first in the industry. We're now seeing many of the OEMs also starting to adopt this platform. You must have heard of that already. That's the second example. The third example is our completely digital app-based merchant acceptance product called Vyapar, Smart Hub Vyapar. We have now close to almost 1.7 to 1.8 million merchants already onboarded on that platform. These are digital first, only digital, no zero POS machine kind of merchants. It gives a wonderful in a minute kind of onboarding experience to merchants, and he can do all his transactions, both receipt of payments and making payments, completely digitally. And as I said, and we grow at a rate of close to 75,000 new merchants every month onto this platform. That's another example of a completely digital platform which we've sort of launched. The fourth example, and it sort of close out there, is we've just relaunched already our Pays app, our completely digital, all new ready Pays app 2.0. We've already seen close to almost 2.7, 2.8 million customers on that platform, and that number is growing significantly month on month. And we've seen a wonderful response to that. This platform is once again completely digital native, completely API based, has all forms of payments in one, completely safe and secure. It also gives you a wonderful, very dynamic marketplace built into that platform. So these are 4 examples of digital platforms which we do. We have many more, and we'll come to you from time to time when we.
Thank you so much for talking to us, and once again, congratulations for the launch.